Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. In this video, we'll be talking about Motilal Oswal's top 10 stock picks for Diwali 2018. Please watch this video to know more. Now the first stock on the list is Maruti Suzuki India Limited, which is available at Rs 7,135.45 and the face value for it is 5. The target price by Motilal Oswal here has been set at 8,484.00. The symbol for it is MARUTI. Now Maruti Suzuki India Limited is a holding company engaged in the manufacture, purchase and sale of motor vehicles, components and spare parts. The other activities of the company comprise facilitation of pre-owned car sales, fleet management and car financing. Now Motilal Oswal is positive on Maruti Suzuki considering its multi-year favorable product life cycle, improvement in product mix is aiding realizations and also improving margins. Additionally, reducing Japanese yen exposure, lower capex intensity, improvement in FCF conversion and sharp improvement in ROIC will also be a positive for the company. They believe that the company would gain further market share driven by 10% volume CAGR over FY18 to 21. They expect the earnings growth to remain strong for Maruti, driven by higher volumes and margins. Now, as is evident, the company has not really done very well over the last few weeks and has been an underperformer. The company is available at slightly expensive price to earnings ratio of 27.30 when compared with its industry PE of 24.45, and the price to book ratio of 5.16 is also on the higher side. The promoter holding is, however, at a respectable figure of 56.21%. Now the second stock on the list is Hindalco Industries Limited, which is available at Rs 240.45 and the face value for it is 1. The target price here has been set at 338. The symbol for it is HINDALCO. Now Hindalco Industries Limited is engaged in the production of aluminium and aluminium products and also copper and copper products. Now Hindalco's India business is generating strong FCF despite factoring in lower margins in the aluminium business led by lower LME and 3 to 4% higher cost of production. Copper business is benefiting from strong byproduct prices. It has a very strong balance sheet with a net debt to EBITDA ratio of 2.9 times. Motilal Oswal expects EBITDA and EPS CAGR of 15% and 20% respectively over FY18 to 20, driven by growth at Novelis and the acquisition of LRS. By FY20, ROE is expected to improve by another 70 basis points to 13.5%, whereas ROCE is expected to increase by 110 basis points to 10.4% pre-tax. Now the third stock on the list is LIC Housing Finance Limited, which is available at Rs 430.55 and the face value for it is 2. The target price here has been set at Rs 550. The symbol for it is LICHSGFIN. Now LIC Housing Finance Limited is engaged in the housing finance business. The company provides loans for purchase, construction, repairs and renovation of houses and flats to individuals, corporate bodies, builders and cooperative housing societies. Now the mortgage market has been in a hyper-competitive mode, leading to increased balance transfers and moderation in growth. Yet, with significant underpenetration and improving home affordability, this segment is expected to grow at 15% CAGR over the medium term. Motilal Oswal expects that the worst is over on the spread front and it should stay stable to improve going forward. This should result in net interest income and PAT growth being in line with balance sheet growth. They estimate an EPS growth of 28% over FY18 to 20, with return on equities expanding to 16% in FY20 from the current 13%. Now the next stock on the list is PVR Limited, which is available at Rs 1,394.40 and the face value for it is 10. The target price here has been set at 1,650.00. The symbol for it is PVR. Now PVR Limited is an India-based company engaged in the film entertainment business. PVR is expected to report a strong 23% revenue CAGR over FY18 to 20, driven by acquisition of SPI Cinemas, 84 to 100 screen additions in FY19-20, healthy content pipeline, driving footfalls, and stable ATP and SPH. They expect 30 to 36% consolidated EBITDA to PAT CAGR over FY18 to 20. Besides, mid-double-digit growth in advertising revenue bodes well. Going forward, an upbeat earnings outlook and a fillip in return ratios augurs well for PVR. Now looking at the valuations, the company appears slightly expensive when compared with the industry PE of 27.45 The price to book ratio of 6.17 is also a bit on the high side. The promoter holding is also nothing much to write about and stands at a figure of 20.25%. Now the next stock on the list is Oberoi Realty Limited, which is available at Rs 427.35 and the face value for it is 10. The target price here has been set at Rs 574.00. The symbol for it is OBEROIRLTY. Now Oberoi Realty Limited is engaged in the construction and real estate development and hospitality business. The company's segments include real estate and hospitality. The company is involved in the development of approximately 40 projects that aggregate over 9.18 million square feet of space. Now Oberoi Realty has one of the strongest balance sheets among real estate companies with negligible net debt. With strong monetization visibility from its ongoing and upcoming projects, Oberoi is expected to generate healthy free cash flow over FY 18 to 20. Motilal Oswal believes that such financial strength offers the company with an opportunity for value-accretive land acquisitions to drive growth potential beyond the existing land bank. Oberoi Realty plans to multiply its annuity portfolio from 1.6 million square feet to 4.2 million square feet, resulting in leasing income increasing by 4 times over the next 5 years. Now important to remember here that Porinju Valiath had also gone ahead and recommended this stock in the recent past as a great value buy. Now the next stock on the list is Infosys Limited, which is available at Rs 662.25 and the target price here has been set at 800. The face value for this stock stands at a figure of 5. The symbol for it is INFY. Now Infosys Limited is engaged in consulting, technology, outsourcing and next generation services. The company has been on a beautiful copybook uptrend for the entire year. However, of late there has been some sort of minor correction. Now Infosys is building a base for improved revenue growth in its 3-year roadmap. Favorable currency provides a tool to effectively address attrition, which is one of the headwinds facing the company. The company recently signed $2 billion worth of deal wins in this quarter. Visibility on revenue growth led by 2-quarter execution and deal wins is likely to drive growth going ahead according to Motilal Oswal. Now looking at the company, it appears to be relatively cheap when compared with industry PE of 22.79. The price to book ratio, however, is slightly on the high side. The company is debt free and the return on equity is a very strong number for this stock and stands at a figure of 0.2406. The company also provides a very strong dividend yield of 6.57%. Now Indraprastha Gas Limited is the next company on the list and is available at Rs 281.85 and the face value for it is 2. The target price here has been set at 373. The symbol for it is IGL. Now Indraprastha Gas Limited is an India-based city gas distribution company. The company's business consists of sale of natural gas. The company is focused on industrial and commercial businesses and supplies compressed natural gas to the transport sector and piped natural gas to the domestic, industrial and commercial sectors in Delhi and the National Capital Region. Now Motilal Oswal is positive on IGL due to IGL's consistent operational outperformance, the government's thrust on gas usage and sustainable high growth market. Led by the strong focus on curbing pollution in the NCR region, CNG sales volume is likely to grow strongly. The expected restriction on the usage of dirty fuels would propel volume further for the company. Now Motilal Oswal expects 12% volume growth and EBITDA per SCM at Rs 5.9 per SCM. IGL has received permission from the Haryana government to lay a city gas distribution network in a part of the Gurugram district. Motilal Oswal believes that more such permissions in other areas of Gurugram can boost IGL's prospects. Now the next company on the list is Exide Industries Limited, which is available at Rs 253.55 and the face value for it is 1. The target price here has been set at 314. The symbol for it is EXIDEINT. Now Exide Industries Limited is a storage battery company. The company designs, manufactures, markets and sells a range of lead acid storage batteries. It operates through the storage batteries and allied products, life insurance business and other segments. Now as is evident from the 1-year chart, the company had been on a beautiful uptrend for the majority of the year. However, of late it has also begun a downtrend. The market cap of the company is 21,551.75 crores, which indicates that the company is a large cap one. Now original equipment manufacturers and replacement demand remains healthy in both automotive and industrial segments. Also, there is a gradual shift away from unorganized to organized players as far as batteries are concerned. Motilal Oswal believes that the battery industry should benefit the most and grow at a CAGR of 10 to 12% over the medium to long term. They expect Exide to continue gaining market share backed by new product launches for existing and new applications and a sharp focus on customer service and marketing infrastructure. Now the next stock on the list is ICICI Bank Limited, which is available at Rs 354.45 and the face value for it is 2. The target price here has been set at 400.00. Now ICICI Bank Limited is a banking company engaged in providing a range of banking and financial services including commercial banking, retail banking, project and corporate finance, working capital finance, insurance, venture capital and private equity, investment banking, broking and treasury products and services. Now ICICI Bank reported better than expected set of numbers for Q2 FY19. ICICI is in the midst of an improvement in the operating environment and is showing healthy signs of earnings normalization. With challenges related to management transition getting addressed, the bank is now focusing on growing its core operating profits. Now the company appears expensive when compared with the industry PE of 31.05 and the price to book ratio of 2.23 is also slightly high for a private bank. The dividend yield here is 0.42%. Now the final stock on the list is Britannia Industries Limited, which is available at Rs 5601.00 and the face value for it is 2. The target price here has been set at Rs 6870.00. The symbol for it is BRITANNIA. Now Britannia Industries Limited is a food company which is engaged in the manufacture of biscuits, cakes and rusks. The company operates through the food segment, which comprises bakery and dairy products. Now as is evident from the 1-year chart, the company was on a parabolic rise for the majority of the year. However, of late this has also corrected. Now rapidly expanding distribution, continuing investment in R&D, rapid pace of new launches and significant expansion of its own manufacturing indicates the immense confidence that management has on its growth prospects. Opportunity beyond biscuits is also substantially high. Continuing premiumization, significant incremental cost savings and a favorable commodity cost outlook means further EBITDA margin expansion prospects are bright as well. Now the company is available at a price to earnings ratio of 68.30, which is largely in line with the industry PE of 63.59. The price to book ratio, however, is expensive at 20.80. The dividend yield is 0.45%, whereas the promoter holding for this company is just about average at 50.66%. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to the channel, please consider doing so.